Hi, and a very, very good, bright morning, winter's morning to you all. It could be morning, and the reason I say that we're joined by someone that is based in the other side of the world, which is super exciting for us all. I'm really delighted that you could spend time with us this morning talking about that frosty subject. Anti-money laundering, and it certainly stoked a lot of debate online in our registration, some early comments and some early chats that have came in to us as well. Delighted to be joined by two AML experts, respective experts in their field. And we'll get to them in a second. But just before I do introduce them, I just want to run through some housekeeping, some basic housekeeping for everyone. First of all, on the right-hand side of your panel, you will see a chat box and a questions area. If you keep the chat box to more technical issues like, hey, I can't see that handsome Kevin Lord's face, or his voice sounds even more strange than usual, then pop that in the chat box. If you've got any technical questions about AML or the content that the guys are going to talk about, stick it in the questions area, and I'll be able to see them. So will our guests as well, and they'll be able to decide whether to ask live or or I can ask them as we go along. Likewise, if we don't get to the question, what we're going to do is collate them all, get David and Nicholas to try and answer them as best we can, and we'll get back to everyone as well. We've also got a polls area as well. So my colleague Nathan, that's on the flight deck beside us, is going to run some polls during the event. And if you don't mind answering them, that'll help us direct the conversation as well, which is great. Okay, so the why behind the AML compliance. Firm Check, we launched 3 months ago, just about 3 months ago, but we've done tons of research in the UK. I've worked in accountancy software for many years, and we kind of know AML maturity is fairly low, if I can be blunt about it, in the sector. But what is even lower is the enthusiasm for you guys to do AML and the compliance. It's a pain in the backside. It's a tick box. You're not getting fees for that kind of thing. So what we want to do is start more of a debate and increase that awareness of what AML is, the reasons that you're doing it, and also the knock-on effects of not doing it, and the other behaviours that you need to look at. So without further ado, let me introduce our guests. First of all, I'll go to David Winch. I've seen David for many years at Accountex and speaking at various events. David is an AML and onboarding advisor to the accounting profession. Without stealing too much of his thunder, good morning, David. Just a little bit about yourself and what you do, and one of the reasons you think we invited you on this morning.
Well, you invited me because it's free. Yes. What I've done, I'm a chartered accountant. I've qualified with one of the big global accountancy firms, and then moved to the very smallest type of accountancy firm in the country. And so I've seen the whole spectrum of accountancy life. But for the past 20 years or so, I've concentrated on criminal cases. I've been a forensic accountant expert witness in the Crown Courts in England and Wales on criminal cases, drug trafficking, money laundering, fraud, that sort of thing. And allied to that, I've also got into the money laundering regulations and how they apply to accountants and what it is that accountants have to do. And more recently, there's been a lot of emphasis from the supervisory bodies for various reasons, which we might get into, on checking that accountants are complying with the money laundering regulations. And I've been helping accountants to do that around the country. And frankly, I enjoy it. So you won't stop me talking, I'm sorry.
And we had a little dress rehearsal a couple of weeks ago, and someone else that doesn't mind talking about the subject until he's blue in the face is our other guest, Dr. Nicholas Gilmore. Nicholas, thank you very much. Let me explain the introduction at the very start. You're based in New Zealand, but guys, wait till you hear this accent. It's definitely not a New Zealand accent. Nicholas's offer of the book that was released this year, The War on Dirty Money, former police officer as well in terms of financial crime. But yes, Nicholas, a little bit of an intro to yourself and why we invited you on, and also the strange tale of how we came to know each other, not me and you, but Firm Check and yourself.
Yeah, so thank you for inviting me. It's a pleasure to be talking to you from New Zealand, many miles away. The sun has just gone down and it's getting dark and cold. But yeah, former police officer, former UK police officer and New Zealand police officer. I finished off in the Financial Intelligence Unit in the New Zealand Police, where I was subject matter expert on lawyers, accountants and real estate agents being drawn into the what we call tranche 2 here of the AML legislation in 2017. And then since then I've been working as a compliance AML anti-money laundering type person. I refrain from using the word expert because I think it's a really dangerous word to use in a lot of those subjects. But I'm confident I know my subject, and was I was lucky enough to be the co-author of the book, The War on Dirty Money. I've been reading about anti-money laundering, organised crime for probably 30 years now, and I finished my doctorate looking at high-value commodities and cash-intensive businesses. So I've done a lot of in-depth research, and yes, I met one of your team here in New Zealand through a Facebook marketplace purchase. And what usually happens in New Zealand is you get somebody who turns up at your address. They say, this is a nice place where you live. You get talking. What do you do? Oh, I work in anti-money laundering. Oh, so do I. Oh, should we connect on LinkedIn? Should we be friends? Yes. And would you like to join my webinar? Yes, of course. So here I am today. So it's a pleasure. And especially to speak back to my home country as well and support the accountancy firms there.
Excellent. And yeah, there's no irony there at all about selling stuff online and meeting people and money laundering and anything like that. There's no irony.
No, of course not. No.
So my first question, and I'll probably stay with you, Nicholas, if that's okay, because David put a really a very, very short post on Accounting Web, and the UK accountants will be well aware of that media platform, if you like, and the comments on there were, shall we say, negative, with my political hat on. But I think the first question to ask is AML. What is AML? Because a lot of the comments there were like, well, isn't it placement, layering and integration like we're all told when we're 15? Is that anti-money laundering?
Well, I think first of all it's worthwhile going back to what is money laundering. And money laundering is one of those activities which is a global problem. It's in every corner of every economy and every side of the community. It's everywhere. It's from the rich right down to the poor, and everybody's influenced by money laundering. And it's not just what Netflix portray as in these great movies, and you've all seen them, where there's huge amounts of cash, but the reality is far more than that. And you're right, one of the things that came from the early 90s, when we tried to understand as a global process of what money laundering was, there was a need to try and give some basic understanding, and it very much came as a three-stage process of placement, layering and integration, where you place the money in the banking system, and that was the formal process where we thought dirty money was put into. It was then moved around by the bank, and we all understand that now within banking system you can press a button on a keyboard and it can travel the world several times by the time you've taken your next breath. But of course then the money needs to come out of the banking system and it needs to be used by the criminal. So that's the integration back into what you could say society. And that model has stuck with us for maybe 33 years now. But actually, in reality, nobody works from that. Law enforcement don't work from that. And many of the policymakers don't work from it. So one of the things we came across in the book was we decided to call money laundering transactions and purchases. And that's a really simplistic approach. But if you think about any money laundering type and any typology or methodology, it is literally just transactions and purchases. Some real, some not. Some made to look more real than others. Some made to be as obscure as and clearly as false as a unicorn. So it's a real challenge. But in terms of anti-money laundering, the global approach to anti-money laundering has been a really interesting one, and that is the Financial Action Task Force have created a policy, and that's all they are. They're policy people, to try and get everybody globally, all the countries across the globe, to conform to some simple basic rules. And the Financial Action Task Force were really one of the first people to put their hand up and say, yes, we'll go with this, we'll run with this. And they've changed over the years, and they've not really reinvented themselves or changed their marketing, but they've tried to introduce new approaches to how they deal with what is clearly an evolving problem of organised criminality. And it's organised criminality which generates the majority of the illicit funds, which we see on programs like the movies on Netflix. So this anti-money laundering approach is now stipulated all the way down, right down to your single accountant in any part of the UK who has to do what the Financial Action Task Force has basically said at a really high level. And that's a terrible position to be in. Okay. And I do not envy them. I really don't.
Well, it's interesting that you changed the terminology there from placement, layering, and integration to transactions, purchases. Another language, debit and credits, which is exactly what the bread and butter of our accountants deal with. You know, money in, money out, and balance sheets. So David, where and Nicholas kind of teased us in there. This is a difficult task, but where do accountants fit in here? You know, why are they seen as the gatekeepers in that, especially from the regulatory sort of point of view in the UK?
Yeah. I think that there is an issue here in that if you're looking from the perspective of the FATF, or if you're looking even from the perspective of Whitehall government in London, then there are things that you want to tackle in relation to money laundering. And perhaps a good example of that is what's called proliferation financing, which is the financing of the production of weapons of mass destruction, for want of a better word, nuclear, chemical, biological, radiological weapons. And from the perspective of Whitehall, crikey, yeah, we want to tackle this. We want to do something about the financing of illicit weapons. That's a major issue. So what do? They put something in the money laundering regulations that say you've got to consider and document your assessment of the risk of proliferation financing. But for the average high street accountant, the chances that their clients are involved in nuclear weapons production is less than zero, if that's a possibility. But now, because it's in the regulations, they have to put some reference to that risk in their AML policies and procedures and in their AML firm-wide risk assessment. And that illustrates the whole problem in that the money laundering regulations are applied to accountants up and down the country. But those same identical money laundering regulations apply to the banks in the City of London. And one size does not fit all. There is an issue here about if we were wanting to tackle financial crime, and financial crime insofar as it is related to local accountants, I don't think we would start by creating what we've got in the money laundering regulations in the UK, which in turn depend on the FATF. And if I may go on to say that in the UK, we have what's called the Consultative Committee of Accountancy Bodies, the CCAB, who give guidance to how to apply the money laundering regulations. And that guidance, unfortunately, in my view, is based on the money laundering regulations, and it doesn't really take account of the world in which accountants live. So that for me, for example, one of the high risk flags for money laundering is somebody who has really bad accounting records, really poor records of their cash takings if they're in a cash intensive business. And is that in the CCAB guidance on applying the money laundering? No, there's no reference to that. So it seems to me that even the guidance for accountants doesn't actually relate to the situation in which the people attending this webinar find themselves in. And so they find themselves having to do a lot of stuff which isn't relevant, and they're actually not directed towards doing the stuff which actually might be relevant and might be significant, might be important.
So if we can, and this is what, and just to give the audience a little bit of sort of behind the scenes, peeking behind the curtain. This was the bit that stoked the debate the last time we met a couple of weeks ago. What is the compliance? And David, I'll stick on with you. Like, what does an accountant have to do to be compliant? And then after that, I'll come to Nicholas, because you were just like, compliance is box ticking, it's a complete waste of time. And actually there's other things that you should be looking at in terms of, behaviors and patterns and things like that. So, okay, let's pretend it's not a waste of time at the minute. David, what is the compliance, and what is it that accountants are struggling to do to manage that and make sure, to steal Nicholas's terms, ticking that box?
So the money laundering regulations have evolved over a period of years. They started out in the 1990s as far as accountants were concerned. The latest version is the 2017, and they've actually been modified as well since. So essentially, what you need to do is to identify your clients, to confirm their identity. So I need to know that you really are Kevin Lord, and you're not actually David Beckham masquerading as Kevin Lord.
Well, some would debate that.
So I need to actually see some documentation about that, or do an electronic check or something along those lines. And then I have to assess the risk that the services I'm providing to you might involve some sort of money laundering activity, or you might be engaged in money laundering, the money laundering risk. So there's an ID stage and a risk assessment stage. And that risk assessment I have to review every year to make sure that nothing significant has changed. And depending on that risk assessment, if I decide that you're high risk, then I might need to do further work, which we refer to as enhanced due diligence. And there's a popular misconception, if you like, that enhanced due diligence means I need to see even more identity documents, whereas in fact, the problem that I see with Kevin Lord might be that he says he's got an income of 20,000 a year. He turns up in a Bentley every time he comes to see me. So the problem really is one of source of wealth. So my enhanced due diligence for that situation is going to be about source of wealth. It's not going to be about, are you really Kevin Lord? And then, as well as that, there's an overarching requirement as far as the firm is concerned to have what's called a firm-wide risk assessment, which is an assessment of the money laundering risk that the firm faces as a whole, and a set of firm policies and procedures, or policies, controls and procedures, if you prefer, a document for that. And there's requirements for things like training and checking on whether the owners of the firm have criminal convictions which would disqualify them from being accountants, and so on and so on. So there's a bit of a range of things to do, which I've tried to cover very briefly in terms of money laundering compliance for accountants.
And Nicholas, why did they do it? Like, it's, if it turns into a box ticking exercise, that's all people will treat it as a box ticking exercise. And you were very passionate about these compliance things, these checklists, these tick boxes that accountants are being forced to do. Let's be honest, forced to do. It doesn't matter if they do it or not, because what do these boxes actually mean in the real world? And both of you have mentioned the real world practicalities of AML. So, what should accountants be doing? Not what are they asked to do, but what should they be doing?
Yeah, it's really difficult, because this is really a piece of work that accountants, like lawyers, like real estate agents, like the banking sector, have to do, or are regulated to do, and will be checked upon whether or not they do it, and find if they fail to do it sufficiently according to rules made up many years ago, without an understanding that compliance is far distant from financial crime prevention. So you've got to remember that accountants will, like most sectors, will follow their prescribed rules. But if we go back to the Financial Action Task Force, their initial approach to now what is basically financial crime is to allow the tick-based rules to be in countries that are developing, but as the countries develop and their understanding increases, to move to a risk-based approach. And that is allowing accountants to understand the risk to their business and the risk to the clients. And that's a real challenge there, because that requires a lot of knowledge. And the knowledge comes from typically the supervisory bodies for most of these regulated entities. But of course, they don't always have the best information to provide, because they've taken it from a national risk assessment or a financial intelligence unit who's copied it from the Financial Action Task Force. So do we hear of facts by repetition? Yes, we do. But we also have an accumulative error that if FATF says something that is applicable to Nigeria, but everybody else believes it, then an accountant in the north of England is also obliged to follow those simple, and they are simple rules, with curiosity of why is this applicable to me? But let's look at what accountants do. Accountants, in my opinion, are not gatekeepers. If we call them gatekeepers, we neglect to remember that they are actually money launderers if they're facilitating a money laundering, a part of the money laundering, a transaction or a purchase. So they are not something that is exceptional. They are not something special. They don't hold the keys to a gate. They don't protect any imaginary gate. But it's that, again, it's that problem of we've labelled them something and it's stuck. They are literally money launderers. Sometimes they'll know they're doing it, and sometimes they'll have no clue. But accountants provide legitimacy. Now, money launderers, the most successful ones, are the ones that will hide in plain sight. So they will be your best client, your cleanest client, the one you have no concerns about, who you've known for many years. That's your best money launderer. The money launderers that get caught are the ones that have made silly mistakes. And the accountant, like its choice of clothes in a morning, it makes a critical decision to wear particular clothes that maybe match or suit the day's activities. The requirement is the same as when dealing with clients, is to think about what you're doing and remember at the back of your mind, am I wearing the right clothes for the meeting I've got? Am I considering my AML obligations here? Am I considering that this person could be a money launderer? Now, that's really hard for a lot of people, because you're asking them to be suspicious about everybody. And unless you've been a police officer, that suspicion is really hard to, because look, everybody, when you're a police officer, everybody's a baddie until proven guilty. And hang on a second, that's against the rules of the law. Everybody's innocent until proven guilty. But it's just that instinct that's grown into you. And I think that's a real challenge. And that's why, of course, we have this idea of putting forward suspicious activity reports or suspicious transaction reports around the world, is to drive that suspicion. But unfortunately, that suspicion doesn't come from a lack of knowledge. You have to have that knowledge. So I think one of the things that accountants can really benefit in their normal practices is to have an understanding within their firm or within their sole practice, an understanding of possible money laundering opportunities to them.
Right.
Yeah, I agree. And one of the comments here, David, and I know you were just about to chuck in here, is actually from Hamish, who's our chairman and a chartered accountant himself. And he's kind of saying, you know, and the reason I'm asking you, David, is you mentioned forensic accountant. Is that basically what we're asking all accountants to be? Is almost ad hoc forensic accountants here, and I will pick you up on that point, Nicholas, that accountants aren't suspicious by nature. Trust me, being in software sales for the last 10 years, they are suspicious of all people like me. Yeah, is that what we're asking accountants to be, David? And then obviously I stepped over you there. You did have a direct response to Nicholas there.
In terms of, Hamish mentions drug trafficking, terrorism, very important, very significant crime. Now, in terms of the work I've done as a forensic accountant over the past 20 years, I've acted, if you like, for a lot of drug dealers because I'm usually instructed by defense solicitors. And then the issue is, okay, our guy's been dealing some drugs, but how much? And what I do not find is drug dealers have accountants. They don't keep records. They don't produce annual accounts. They don't send returns into HMRC. And similarly, terrorists. So your high street accountant is going to say, yeah, fine, I understand drug dealing, terrorism, very serious. Yeah, get it. But they're not my clients. And here I am with my clients saying, produce your passport before I can fill in your self-assessment tax return. So there is an issue there. Where I do see accountants dealing with criminals is in relation to, for example, the circumstance where, Kevin, you come along as a client and you say, I've got this limited company. Actually, it's not mine, it's my brother's, but he's barred out of being a company director because he's had a recent bankruptcy, unfortunately. So I'm the director, but it's actually his business. And in terms of identification and so on, what accountants need to be wary of is that sort of situation where this person who presents himself as the client, okay, yeah, he really is Kevin Lord, but he's not really the operator and owner of the business that we're acting for. And that is a huge red flag, because in those situations, you see frauds, you see fraudulent trading, you see all sorts of criminality going on. And because it's disguised with somebody else, as it were, fronting the job, probably somebody quite innocent who's just trying to help out a mate or a relative who's got some difficulty. So those sort of issues are real red flags for accountants in practice, but they're not the ones that are highlighted by the CCAB or the money laundering regulations or so on. And they're not something that I would pick up by looking at your passport and your driving license and a utility bill. There's something that I would pick up, hopefully, because I actually know the business. We talk about know your client, and the reality is it is about know your client. And accountants up and down the country do know their clients, or should know their clients. Most of them do know their clients very well. And because of that, they actually are in a position to know if something isn't right, if something smells. A problem is that accountants naturally are focused on preparing accounts and doing tax returns. You've got a limited amount of time, a limited amount of fee. Somebody says, I want my accounts done, I want my tax return done. Yes, bang, 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 you do that, get it done, the figures all balanced, thanks, great, marvellous, send it in, on to the next one. And you maybe don't stand back and think, does this actually make sense? I see in my criminal case, loads of eBay traders and car boot sale people who are basically selling stolen goods. And that is money laundering. And some of those do have accountants, and the accountant has never sort of stood back and thought, I wonder where this guy's getting this stuff from that he's selling. And so it's those sort of issues really which are relevant to smaller firms of accountants. I'm not talking about relevant to the big four global firms of accountants. I'm not talking about, when I was in the big four, I did the audit of Shell, the fuel company. When I say I did it, I did about that much of it. But it's not that situation really which I'm addressing in terms of the people who are attending this webinar. I don't think we've got the auditors of Shell attending this webinar. I think we've got the people who prepare accounts for the corner shop and the pub and the small engineering business and so on who are interested in this.
So you did mention there that, they should know their clients, and, they should take the time to go, hang on a minute, there's something not right there. So again, what's stopping them taking that time? Is it the lack of education on what the AML annual checks are, or the compliance? Are they just treating AML as that, hey, I'm done a set of accounts now, this is my end of year process, is the ID right, tick, tick, tick? And actually it's not what the rules say, it's not a continuous due diligence on these people, is it? It's and what's the main barrier of that? Is it attitude? Is it awareness? Is it process? Is it technology? In your experience, what is them stopping them making that sort of commitment to diving in that little bit deeper?
I wouldn't say there's a lack of commitment. There's a video on YouTube with some guys playing basketball. A couple of teams playing. Well, they're not actually playing basketball, but they're passing basketballs to each other. And you're asked to count how many passes the team with the white shirts make over a minute and a half. And you watch this video and you count, and then at the end it tells you, and you think, yeah, I got that right. And then it says, well, did you see anything else happening? And you thought, no. And you look at it again, and there's some guy in a gorilla suit walks across the back, and you just don't notice it because you're so focused on the ball and counting the passes and things that you miss this blindingly obvious creature walking across through the street. I actually showed this to a group of policemen in England, and I said, "Did anybody see a gorilla?" And it's like, no. And I showed it again, and somebody said to me, "That's not the same video. You've faked it." And yeah, it is the same video. And the point is that you are so focused on what you're doing that you don't see anything else. And for accountants, you're focused on, let's get the figures right, let's get the accounts done, let's get the tax return done, let's send it in, get the client's approval, move on to the next. And you don't stand back and think, what is this business about? Why is all this happening? Does this look right to me? Or does this not look right? And that really is what Know Your Client is about. Understanding the client's business, and it does involve a little bit of extra time. And of course, accountants, most good accountants, actually do want to know their clients, do want to understand that they want to be more than just a form filler for their clients. They want to be an advisor, and to advise somebody, you've got to know and understand the business. And actually, the KYC and the money laundering compliance can fit in to developing your practice and developing your advisory practice and helping you work with your clients. It can actually be useful, shockingly. Okay, seeing passports isn't particularly useful, but getting to know the client, getting to understand can be useful. And unfortunately, it's developed, as Nicholas says, from this FATF basis about gatekeepers and major money laundering crime. And it doesn't, what we're required to do for the MLR isn't really the most helpful stuff, but we can make it useful. We can use it.
And you mentioned sort of the market trader or the eBay trader or the car boot sale. Nicholas, are there any other glaring red flags that happen in the sort of day-to-day transactions of businesses that accountants should be aware of, or things that you've seen certainly in your history of going, how on earth did you not pick that up? Or, you know, if we are asking them to think a little bit deeper, then are there any, you know, common red flags that you've certainly experienced?
I detest the idea of red flags, because I think it complements the idea of a checklist far too clearly. If you have a checklist of I need to do, and then I need to look for, and then you follow a checklist of red flags. First of all, a red flag is usually an indication of stop, rather than let's try and manage this and let's look at this risk and understand the risk according to this customer. So this customer's put in $10,000. It's a red flag. Do we stop, or do we understand the risk and how it relates to their normal business activities? So red flags are far too descriptive. And the trouble is that red flags are used as an indicator to try and prevent something. And this is where that disconnect between compliance and financial crime prevention come in and are really sort of demonstrated, is that if you're a money launderer, you're going to do everything to hide in plain sight. You're going to apply yourself to be the most normal customer, the most normal client, the most normal person in society. Because if you've got a flash car and you park it on your driveway and everybody else has no flash cars, in fact, everybody else has no cars, somebody on that street is going to start indicating there's an issue here and I'm a little bit jealous and I'm going to give somebody a call, and it's going to draw attention. And that's what money launderers and criminals don't want. They don't want that attention being drawn to them. So for me, I'm a little bit different to David, because I know David's had the experience of the investigations and the expert witness. But for me, I see all the ones that are in court as the playing at it money launderers and criminals, because they've made a really silly mistake and they've got caught. They've maybe been a bit lippy. They've maybe been a bit clever. They've maybe, and there's instances where criminals will have a bag full of cash on the back seat, but get done for speeding. And then, of course, the police officer stops them and sees the bag of cash and, oh, hang on a second. Now, if you hadn't have been caught for speeding and you'd have hidden in plain sight and travelled with the rest of the traffic, you would have been okay. And that's what money launderers need to do and criminals need to do, and particularly money launderers, because all criminality has a laundering approach or a laundering end to it. So I understand money laundering as being probably the most important of all criminal activities, because it's fine you committing crime, but if you're going to come up with a bag of cash of £100,000, if you can't launder that, it's just a bag of £100,000. So you've got to really do something about it. And this is where accountants provide legitimacy. So where David says he's not seen, I would say when you do see, you need to ignore it, because it's the ones that you don't see that are your issue. So the way I would say to accountants is, picture your best client sat in front of you or on the telephone, the one you've known for years, the one you've had a great relationship with, and just picture them in your head, and then immediately say to yourself, without saying, no, this is not possible, that they are a money launderer. And just question yourself looking at them as a money launderer, and see if you can come up with those instances of, I remember when he or she said this, and now I think that might not have been quite right. Because at the end of the day, the successful criminal will use a normal person to use an accountant to hide in plain sight. So that person might have his family held at gunpoint. His family's safety might on a regular basis be in danger. But the client in front of the accountant could quite easily be a money launderer, the most successful money launderer, because they've not been in front of the Crown Prosecution Service. And that's really, really worrying. But if you think I'm being sort of scaremongering or just hyping up the problem of criminality, if you look at all the global crime around the world and you look at the fraud problem in the UK, which is growing drastically, and you think all that money, all that illicit wealth needs to be cleaned. And when I say all of it, I'm talking 99.9% of it, which is a huge amount of money. It needs to be cleaned. It's got to go through professional services such as accountants. But the flip side to that is, and I've had this experience, when you go to law enforcement and you say, can you please give me a case study of when an accountant was involved in a criminal investigation and how the criminals used that accountant, law enforcement will be very, very hard pressed to show you something. And that's why we have a number of cases which seem to be repeated as case studies where accountants have been dropped in. And that's where it comes back to, well, they should have seen this. This was a red flag. Those red flags just narrow your focus right down, and it needs to be the opposite. And I'm not trying to scare accountants into thinking everybody's a criminal, but you just need to consider the possibility.
One example, actually, I came across of an accountant involved in money laundering was clients came to the accountant and said, we're setting up a travel agent's business. Money's moving all around the world, particularly, as it turned out, South America. We're having a bit of a problem with the bank, actually. It's taking ages to set up the bank account. Could we use your office client account to pay these people in South America? Accountants trying to be helpful. New client is potentially going to be a really good client. Yeah, okay. Yes, if you put the money in my office client account, I'll send it off to South America. Of course, what happens is that the Royal Navy intercept a yacht coming from South America, stuffed at the gunnels with cocaine, and who's paid for it but this accountant? He sent the money to purchase all this cocaine, and it doesn't look good from a law enforcement point of view. Now, I can understand why the accountant trying to help crossed a number of red lines, if you like. You really don't want to use your office client account, if you've got one, to pay customers of your clients. Effectively, you're acting as a bank. You don't want to do that. But yeah, so that was an example of an accountant being used or being abused, perhaps I should say, as part of a money laundering, drug dealing exercise. But it's rare to see that. And most accountants actually don't handle client money because it's a pain in the posterior.
So I'm delighted you said it was rare, and we're coming up for, believe it or not, 45 minutes. We've been rabbiting on, and there are a couple of questions in the questions area, so I will get to them, guys. I think there's 2 questions there. Just want to kind of, I don't want to say this has all been negative or doom and gloom. It's just been really insightful, but I'm going to take the quotation marks off the why behind the AML and just say the why behind the AML. So surely this compliance, these regulations have been a force of good somewhere. You know, is there any proof that these regulations and these rules have actually impacted AML? Please say yes.
The part of the problem is that the NCA in the UK get now about 900,000 reports a year. 900,000 suspicious activity reports a year, of which about 5,000 come from accountants. And so there's this vast avalanche of information going into the FIU, and there aren't the resources to pick up all of those 900,000 and sift them carefully to see which of them might be significant or not, to follow up and so on and so on. So accountants do feel, hey, you know, I sent in an SAR and I put everything on a plate. I gave them all the details. I sat back, I look out the window to see the blue flashing lights of the police cars turning up. Nothing happened. The same thing is carrying on. I sacked the client, they've gone to another accountant, they're doing exactly the same thing as far as I can tell, and nothing at all has been achieved by all this effort of compliance. So why am I doing this? And I can understand that frustration, absolutely understand. And I run a business called MLRO Support. And as I said recently, it's called MLRO Support. It's not called Discover Money Laundering Limited, because what I'm about, as Nicholas mentioned, the disconnect between the compliance and the dealing with crime. And what I do with MLRO Support is I support and help accountants to comply with the regulations. And I point them to a little plug here, software such as FirmCheck. And so, you know, this can make it easier to do all the things that you need to do. You know, you can do it manually, you can do it old style, but why not get hold of some software that makes it a heck of a sight easier to do, and then you can get it done, get it sorted, and you've documents to show that you've done it. And so the money laundering compliance it becomes about compliance for the sake of compliance, compliance for the sake of avoiding my professional body coming at me with a big stick saying that I haven't done what I should have done. And it has become very largely divorced from preventing and detecting crime, which is sad but true. I don't know whether, Nicholas, you agree with me on that.
Yeah, so if you look at the approach to money laundering, the whole idea of being a money launderer is to distance the final money, which you've appeared to make clean. Bearing in mind, you never wash this money. This money always stays dirty. So the idea of a washing machine is just a waste of time. And we need to scrap that idea. But the whole idea of money laundering is to distance the money from the initial crime. If you can make that distance huge, or you can make it very fuzzy, you've done your job. What happens with SARs going into the financial intelligence unit is commonly they are held there and are never shared with law enforcement, who have the details of the criminal but don't have access to the details of the suspected suspicions, money, stuff that's put in by accountants. So effectively, the good boys and girls, the good guys and girls are actually doing exactly what the money launderer's doing in creating and keeping that distance. So it'll never get put together. And that's a frustration within law enforcement. And that's why we don't have those blue lights going around outside the accountancy firms once they've put out those suspicious reports, is that there is no immediate reaction. But the compliance industry globally is a $210 billion US business. It's growing and growing and growing. Now, your question was, does AML compliance have a positive, really? Is there something, have we done something right in the last 30 years? Now, I would say we have. We've narrowed the playing field of which a common criminal, a start-off money launderer, is likely to get caught, more chance of getting caught. But at the same time, criminality has become more sophisticated. Technology is supporting us, and they've got broader in their approach. So we've advertised in AML compliance exactly what those red flags, those tick boxes, those practices and procedures, and the risks that we're looking for. And the criminal's done its counterintelligence and said, right, if that's where your focus is today, such as environmental crimes or human trafficking, and the red flags related to that coming through my accountancy firm, or through this accountancy firm, I'm now going to apply myself in a completely different approach. So the money launderer is like a bank. It is really good at understanding risk. The banks do not lend us money if we can't pay it back. The money launderer will not take its behaviours and its actions in areas where the risk is greatest. But there is positives changing. But I don't think we can continue for another decade in our current AML compliance understanding, because the criminality is different to what it once was when we created these procedures or these requirements.
Excellent, and it's up to companies such as ours to make sure that compliance is ever changing, and the tools are there as well. Now, David, thank you for the plug on FirmCheck. It's only fair that we return the gesture. So Nathan, my colleague in the background, has some links prepared there. So by all means, follow David, follow Nicholas on LinkedIn. You'll get the links for that as well. There'll be links to Nicholas' great book, The War on Dirty Money. Honestly, my wife said to me the other day, "Are you buying these books for Christmas for people?" I went, "No, it's for myself. Don't worry about it," because she saw the Amazon Kindle receipt coming up. So yeah, it wasn't sexy enough for my wife, Nicholas, but I've got on the Kindle. It's up next for me. Final 9 minutes. There are a couple of very specific questions in the question area. I think, I think one of them certainly dives into your post on Accounting Web, actually, David, as well. But I think we've perhaps covered, what is AML. But the first one here from Jill. Jill's a payroll bureau, so it's slightly different from an accountancy practice, but they actually fall under the same regulations in terms of HMRC. And we've got a number of payroll bureaus actually using FirmCheck, which I think is quite interesting. But would you see the AML role of a payroll bureau or a payroll agent? Because obviously they're just dealing with the business and paying staff. Is there a specific role for them in AML?
Payroll agents are generally regarded as higher risk. And the reason is that if you actually want to launder money, one of the good ways of doing it is to pay it out to somebody and call it salary, put it through PAYE, and then that's totally legit, obviously, except it's not. But so payroll bureau are seen as a high risk area from an AML point of view. Now, the risk, I suppose, is concerned with paying people for non-existent work, paying people for a non-existent purpose as a means of laundering money. And the question is, well, if our clients are accountants, they've done AML on these clients. If our clients have accountants and the accountants have referred the job to us, the AML's already been done by the accountant. Do we have to do it again? Kind of the short answer is yes, unfortunately. And what's your role? You have to demonstrate that the employer that you're acting for is a business. You have to do perhaps a check at Companies House and so on, just to show that we are genuinely dealing with a business as far as we can tell. If there are accounts prepared, that's great. One of the loopholes, and probably again using a word which Nicholas won't like, one of the loopholes is that it's very easy to create a company at Companies House in the UK. The law is changing around that, but at the moment it's very easy to create a company at Companies House, not file any accounts, do all sorts of stuff through it for a year or 18 months, and then close it down and never file anything with Companies House or with HMRC. And in that way, you have what appears to be a legitimate company. You can do all sorts of stuff through it, and nobody's ever going to care, and it's unlikely to be picked up. So if I'm giving advice to how to launder money, that would be a way to do it. Perhaps I should stop now. You better kill the video feed quick before I give too much advice on how to commit crime. But so coming back to the payroll bureau, the question is, your AML due diligence is around recognizing that this is a bona fide company, that the amounts you're being paid, you're being asked to pay look like they could be sensible. Hope that's a sort of answer to Jill's question. I don't know whether Nicholas wants to add anything to that.
There was an instance in, I think it was Nottinghamshire, and I covered it in my doctorate research. And it's a nice bar. It was a nightclub. And one of the things that the person was doing, the guy that was running it, and this was the guy that got caught for speeding in the end and got basically banged up for it. It was that silly mistake, was he had a lot of cash coming in through cash sales of champagne in the nightclub in an area not covered by the CCTV. And the police force were really good at giving me this information about the investigation. But one of the things he was doing is he was paying in salary the cleaning business, the entertainment business. And when you actually looked at the nightclub itself, the nightclub was like a bit of a spider's web. The nightclub was at the center, and then it just went out and out and out even further to other connected bits. And that idea of using salaries is great, particularly if you're paying in cash. If you're bringing cash in, which is dirty cash, such as from a cash in transit robbery, where you've done over the bank, the old-fashioned way of guys doing over a bank in a transit van, which are probably uncommon now globally as well. That cash paid out into wages, if it can be put through what appears to be a legitimate process, then fantastic. You're not having those eyes peering over it, which says, hang on a second, what's going on here? The whole idea is to hide in plain sight. So if you can use a professional, use a professional. Encourage them by bribing them, by manipulating them, by choosing them because they've no clue what's going on, but use a professional. That's what I would do.
Yeah, I did come across...
But I won't tell you any more.
That's both of you giving tips. Sorry, David, on you go.
I did come across a case, how long have we got? A couple of minutes. A case of a guy who ran an engineering company, and he had about 50 or 60 employees, operated PAYE, of course, did all that. Actually, he never notified HMRC that he had any employees, and all the deductions for income tax and national insurance, he was sending off to his own bank account, and he was doing very well. Now, because of RTI and changes in things in the UK, I don't think that would be possible anymore. But again, I suppose as a payroll agent, yeah, you want to be sure that actually the payroll does link to some returns that are going to HMRC.
Okay, thanks, guys. Last 2 minutes. Satish, we won't get around to your question, unfortunately, but we'll get an answer to you. We'll send it via email. We'll probably put it on the roundup for everything here. I think if I could summarise, really, this is a sort of never-ending challenge for accountants. They shouldn't see themselves as gatekeepers per se, but really take the time to know your customer, really dive deeper into the debits in, credits out, purchases, transactional information, and perhaps use software like ours to get rid of the box ticking exercises and make sure that you're compliant to really dive into what's going on in the software. I've done really well there to get that back into firm checks line of vision. Sadly, these webinar platforms, I was saying to the guys, I've done over 1,000 webinars, I think, in my life. And sadly, when I hit end event, I don't see David or Nicholas at all. So all that's left for me to do is thank both of them for their time and their knowledge and for sharing that. We shared the links of their LinkedIn profiles as they were both talking there. Dr. Nicholas's book was also there as well. And for the accountants on the call, you'll no doubt see David at Accountex or Accounting Web and all those lovely places that we go. So it'll be good to meet you face to face next year, David. So thank you very much. I hope everyone enjoyed it. You will get a recording of this very, very soon, almost as soon as we finish this and we get it edited properly. But no, thank you. Hope you enjoyed it. Nicholas, enjoy your sleep. And thank you for staying up late talking to the UK. I'm sure you enjoyed that. But any closing words? You've got about 20 seconds, guys. But thank you very much, and look out for more information from FirmCheck.
No, thank you very much. And
Yep,
we'll
thank
see
you very much.
Thank you.
Yep, good luck. Thank you very much.